Hey guys, Mike here. So I got a loaded video for you. It was an absolutely, kind of in a way ended up being a very crazy day in the market. Some stocks up, 15, 20%. But what was amazing was what happened. PPI came out, right? And it came out really hot, right? So now we got a CPI inflation report higher than expected, and PPI was even worse. And you're thinking, well, boy, if this don't drive it down, what's going to drive it down, right? And so I got a whole bunch of stuff going to the charts and everything else, and one stock that made a crazy move that I'll talk to you about. And then at the end, maybe you'll be surprised by this data as much as I was, but I'll show it to you. And there's nobody's talking about. I haven't even seen this in the news. It just happens to be something I ran across, and I'll show it to you. But here it comes. The market obviously turned red right away. I mean, down between 1.5% after PPI came in higher than expected, at 6% year over year versus 5.4% expected. And the month over month, 0.7% month over month, not 0.4. So that is a hot report. Of course, the market gaps down, like I said. But what saves it? And it's right here, guys. It's this 408 wall that's in place right now. Is it going to break tomorrow? We'll have to see. Again, we got OPEX, monthly options expiring. People are expecting a big drop. And I'll talk about that in just a minute. But you can see it hit it not once but twice on the smaller time frames and just took off back up. And once again, I mean, look at that chart. How many gaps do you see there, right? And they tend to all get filled. Now, this has something to do with that. Read a great article, shared it with the members this morning about this right here. These options expire within 24 hours. I mean, it's well over 50% now on a daily basis. And if you look, I mean, what happened? We end up running up, almost closing the gap completely, and then this massive sell-off. Like, what in the world? Why would we have this massive sell-off? Was there some crazy news? Not that I could find, but here's the one thing. I'm not Nostradamus, that's for sure. But I put this out this morning for open. I said Max Payne drops all the way to 405 tomorrow. This means this is going to be a very funky day because something has to give, because we were up way too high, way away from it. And, look at that. It drops all the way to what? 408. The 408 wall is where it held up. Again, where it's going to open tomorrow, we don't know. But here's the kicker. Now you're only 0.83% away from 405. All right, and so you got us much, much, much closer. You've been almost 2% away if you didn't do that. And so that would have been a really massive drop. And so it's amazing, how the market works, right? I mean, you see them, they work their way right into position themselves, because remember, it's monthly options expiring tomorrow. This is the big one. Okay, this is the big one. And Tesla. You look at Tesla. Tesla was up, right? It gapped down, closed the gap as always. I think this is a new high for 2023 at 217, right? And all of a sudden, it starts to sell off. What's going on? Well, of course, this news hits all over, right? Talking about Tesla recalls 362,758 vehicles because the software can cause crashes. And this started popping up every feed I had on my phone, right? And of course, what happens? It starts to sell off. Of course, I mean, that's what's going to happen. Of course, what saves it? 210, right? 210 had become a nice little support level for it now. It bounces up. Where does it get rejected at? Exactly at 214, right? Another resistance / support level there. More resistance than support. And then, of course, the whole market sells off. And so it just tanks. And this was a really a nice move down. I believe this is like 7.5% if you take it from the top of the day right there. And so that's a big one-day move right there. And so, I will see if the dip buyers, swarm back in, start buying it again. You got 200 right below, which I think would be very tough to get through because there's so many dip buyers on Tesla right now. But we'll see. We'll have to let me know in the comments what you're doing there. Meta, we'll touch on it really quick. Still filling the gap. It got the MACD crossover, which we were looking for, the bearish MACD crossover, that is. And if we go to a smaller time frame, you can see pretty much it's just sitting here, just stepping its way down as we kind of zoom out right now and just leaving gap after gap, actually. So now we got gaps within a huge gap, but it's just stepping its way down nice and slow. Like I told you, the shorts would be just waiting for this thing to fall in this gap. Now, whether or not it's going to fill the whole gap, we'll have to see. I think that depends on really the market, because if you look at it, I mean, it is going from a bigger time frame. I think we still got, 10% here to drop, and so that's still a big drop. And I know a lot of people are waiting to buy right there. You'll see algos kick in. Other people looking around 140 area to kick in their buying. But I think you'll start to see a lot of dollar cost averaging going down, which is why I think it's just kind of stepping its way down, not just falling down like a meteorite or anything. And guys, if you get anything out of this, please hit that like button. It really does help the channel. And if you're new here and you like this kind of content, think about hitting the subscribe button. I really appreciate it. And so I always like to show you stuff like that because nothing's an accident in the market. And supposedly tomorrow, one of our members shared a great video, which I watched, and talking about volatility and stuff. And, tomorrow is monthly expirations, and supposedly, either one, two things is going to happen, according to this gentleman in this video, which seems to know what he's talking about, since he runs a volatility fund. And he said, you're either going to have a major drop tomorrow, right? But the problem is a lot of people are expecting that. And when a lot of people are expecting something, maybe you don't get it. And if you don't get it, then you're going to start, so you'll probably start seeing a lot more to the upside at that point in time if it holds up. But a lot of people are just expecting that because of all the options expiring tomorrow. And so that's going to be interesting. So watch in the morning, see what happens. I mean, you see what's been happening lately. We've been gapping down and immediately filling the gap. So we'll have to see if that continues to happen and people just keep coming in and buying up the dips. And speaking of dip buying, I mean, again, this had to be big money doing this, but it's just amazing to see this. There was earnings on a company called Datadog, right? And they're a cybersecurity company. And Tahoe Alley, she pretty much runs our day traders channel in there, puts a lot of stuff in there and great stuff. Follow her on Twitter as well, puts out a lot of great plays for you. But, Datadog reports, and they do a top and bottom line beat, and it looks good. But then they guide down for the whole year, and it's really not even close. It really was, to me, a big guide down right there. And so what happens, the stock drops double digits in the AM, right? And you can see this. Look at this drop. Boom! I mean, just explosive move down. This is a 5-minute chart. Look at the volume bars. Look at that. And next thing you know, it's green, right? I'm like, what in the world? You got to be kidding me. They guided down for 2023. But one thing about this stock, which I always tell you helps out, 80% is owned by institutions, right? And you saw those volume bars. That wasn't retail just flying in there like that. And you can see what they've been doing with this company or this stock. They've been buying it up all the way down. As it just kept dropping, they just kept buying, and still keep buying. And of course, what happened to that stock, and even crazier, it just bled out all day long. I forgot what it ended up. I think it was down 7% or something for the day. And in full disclosure on that one, I know we don't share trades like that, but I actually did buy puts on this thing, right? And I had to take my dog to the vet. And so I'm thinking, I see it down in pre-market down 10%. I'm like, there's no way it's just going to jump back up. They got it down for the year, right? So I'm filling out paperwork. I'm in the vet, just getting a checkup. She's fine and everything. That's like, I got there like 9:25, what it was. Walked out at 9:45 thinking, it's no big deal. I bought it in an account where I don't use my phone for this account, right? And so I had to wait to get home because I don't like to get on my phone with this specific account. It's not my main account. And so I get in the car and I pull my phone up, and it's up 1%. And I was like, what the heck? I mean, there's no way. You got to be kidding me. It's like this, but it's so amazing to watch that you can, say, I was right. It missed and you're good to go. And then all of a sudden in 15 minutes, rocket ship back up, right? That is just insane movement right there. But, and again, it ended up 7% down for the day. And so, yeah, that was crazy. But, look at this right here. This is what I was talking about when I say Teen is dead and there's other options now. Look at this. The 6-month Treasury, over 5% for this thing. And I think I told you even like Vanguard has something now. It's over 5%. And I mean, it's just amazing what you're able to put your money into and now draw it. Because right now, I think the S&P is like projected of a growth of like return like 5.18% this year or something like that. Which, I mean, who knows if that's going to turn out to be the case. And there's risk in that versus this right here. You're like, I think we're good. I'll just draw the 5%. So, and that's what I was talking about with retirees and pension funds and stuff like that. Now they can draw that. And, especially if treasuries, which is about as risk-free as it gets, you're like, wow, okay. I mean, and we don't know the answer to this. We will know, like, how much all of a sudden is that going to be going into bonds, treasuries, other kinds of securities where you can draw a nice interest rate, which almost risk-free in a way, right? Versus throwing it in the stock market where it's just so much uncertainty, right? You don't know what's going to be going on. And so, and that leads me to this one. This is the one I'll finish up with. This surprised me, and I haven't heard the media even talk about this, but this is bankruptcies. And so bankruptcies on the rise. Look at 2023 to start the year. This is the worst start of any year since 2010. It's been 13 years, but that's the amount of bankruptcies for companies that have at least 50 plus million in liabilities. And I think I know what's leading to this because I also read an article on this as well today. But I just did a members video on about how banks are tightening their standards, right? And it's actually way up. It's been going on for a while about loaning stuff out. So, of course, these companies, when do you go bankrupt? When we don't have enough money to keep the doors open, right? So if you can't get funding or it's at such a high rate, you just can't afford it, what happens? You go bankrupt. And that's what happened. And so, and of course, what happened, a lot of companies took on a lot of debt, right, for free. And so now all of a sudden, they're either trying to refinance the debt, but you got to refinance it at a higher rate, or trying to take out new debt. And it's a much, I mean, the interest payments are much more. I showed you on a house what the difference was. It was amazing, right? What the difference was. So amazing. Imagine what some of these companies are actually taking out debt at, or what rate they're taking it out at, right? And so, again, that's another X factor in this whole thing of like the whole refinancing of debt, which hadn't really happened yet on a larger scale. Is next year, I believe it is, where you get like the really an abundance, trillions of dollars in debt has to be refinanced. And that doesn't even count new debt having to be taken out as we go through 2023. And if they keep raising rates, what happens, right? Banks will continue to tighten. And what's the lifeblood of the country, right? It's small businesses, really, small mid business, not those large ones. And so those are the ones that can feel it the most. And so let me know what you think down in the comments if that surprises you. It did surprise me because I hadn't heard anybody talking about it. And I pay attention to the news all the time because I run a channel and I try to inform you guys and stuff. So anyway, tell me what you think about the day as well, that big sell-off, and what you think is going to happen tomorrow on OPEX, right, which is big days. And I'm doing some research into that now for us. I'll let you know because it really does affect the markets a great deal, especially now more than ever. Okay, so hit the like and subscribe button if you got anything out of it, and I'll see you guys tomorrow.